Traders, happy Thursday. Happy Thursday to all of you. Welcome. Welcome to another Technical Analysis Thursday with Oliver Velez. Of course, my name is Oliver Velez. And let's get to it. But first, I just want to welcome all of you, wherever you are coming in, wherever you're piping in from. It might be afternoon for you, as it is for me. It might be in the wee hours of the morning for you. It might be in the evening for you, but wherever you are, welcome. Just as a kickoff point, just let me know very quickly where you're coming from here, guys. As I'm always constantly mentioning to you, we do draw a very international audience here. That is something I'm actually proud of. The message of trading, the last bastion of total independence, we're able to spread all over the world thanks to technological advancements such as live streaming, the internet, and things of that nature. So it's a wonderful thing. The world has gotten a lot smaller. Many decades ago, I was actually sharing my knowledge in physical rooms with limited people capacity, standing up in the back of the room back in the 1990s. Now it's to tens of thousands of people at a clip at a time all over the world from all four corners of the earth. And that's very special. So I see Brazil is in the house. I see, wow, Denmark is in the house. UK, Florida, Long Island. All right, Long Island. Long Island. All right, Canada, North Carolina. Yes, India's in the house. Boston, Pakistan. All right, DC, the promised land. Okay, India's in the house again. Miami-Dade. I see another Pakistan. DR. All right, Dominican Republic. I might be heading down to the Dominican Republic in the next couple of days, actually. San Francisco. Wow, Wellington, Florida. My neck of the woods. Welcome, Mike. Wellington, Florida. That is Horseland, the equestrian capital of the United States. Oliver is the best teacher. The best teacher you could ever find. I appreciate that. Don't waste your time like I did. I wish I knew this earlier. Thank you. Thank you. I appreciate that. All right, guys. So listen, yes, once again, drawing from all over the world: Australia, Atlanta, New York, Naples, Indonesia, Poland. Quite amazing, guys. Quite amazing. So listen, as I promised, I told you that I would be restarting a very popular series, actually two very popular series, Q&A Mondays, which we did Monday, where I open up to your questions. I give you the opportunity to interact in a live setting, to ask anything regarding the content you receive here on my YouTube channel. I think that's very important. It will help bring the content that I share here alive. It'll help remove some of your doubts, some of your confusion. It'll actually add some clarity to some of the things that I can only try to squeeze into a 12 to 18 minute video. So having a period where we actually just get together in an open format and you just sling your questions at me regarding that content, I think is extraordinarily valuable. So that happens every Monday. Every Thursday, all right, unless something comes up, but every Thursday is what I call Technical Analysis Thursday. And that's what we're doing today, where I take a specific technical concept and I cover it with you. And I charge you with actually going out into the market yourself and practicing the use of this technique, not technique, or this technical item that I share with you. Now, every single technical thing that I share with you on these Thursdays is something that I actually use. My traders and I in particular, use virtually every single day in my trading. And so if you collect a number of these technical items that I share with you on these Thursdays, you can put together a very little power-packed package of little tools that can give you an edge and cause you to be head and shoulders above the vast majority of people playing out there in the markets today. All right, I don't want that to sound egotistical, but it's absolutely true. So today, guys, what we're going to do is we are going to focus on a concept that I have harped on a number of times before. All right? So, a number of times before, I've harped on this topic. But today, we're going to revisit this and do a little bit more of a deep dive. The technical concept of space. Okay? The technical concept of space. We might even bring in the concept of time, which is somewhat synonymous. But I want to talk to you about how I use space to gain a little bit of edge on other traders, how I use the concept of space to increase the quality of my trade selections, how I use the concept of space to assess higher degrees of probability. So how I use space to shift the odds in my favor. All right. It's a very, very integral part of my trading. And I want to share it with you today. All right. So let's talk about the concept of space. In order to do that, I am going to have to go to a full screen here. And it keeps doing that. See if we can do it like that. Boom. Okay. Now, guys, the first thing, I can even use the first thing I have up here. I have Bitcoin. It's one of the things I watch most closely in my life today. Most of you should know that by now. But we're looking at, right now, a 15-minute chart of Bitcoin, right? And I just want to make sure that everything is okay here. So we're looking at a 15-minute chart, which basically means that every 15 minutes, each bar represents 15 minutes of trading. Every single bar you see represents 15 minutes of trading, right? Okay, just want to make sure. Give me a second here. Okay. Right. Good. So, right. Now, if you've been following my work for any period of time, you know that I do not ever look at a chart without two key moving averages on them. The blue line is the 20-period moving average, which you see here. All right, the blue line, or the blue moving average, is the 20-period moving average. These are all simple moving averages, okay? And of course, the red one is the 200-period moving average. Now, as far as I'm concerned, a chart is not a chart unless I'm looking at the chart through the eyes of these two moving averages. There is a concept, the concept of space is predicated on these two moving average as well as the price. So item number one we need for the concept of space is we need the price, of course. Okay. Item number two is we need the 20-period moving average, 20 MA. And item number three, we need the 200-period moving average. So it is with these three items that we can now create or bring about or bring alive the concept of space. You see, whenever there is space between each one, it's significant. So whenever the 20 and the 200 move apart to have a wide space, that is significant. Whenever they move together to have almost no space, that is significant. Okay? So let's look at this. Let me draw this diagram for you. Let us say that you have a 200 here. All right? And then you have also the 20 here. Now, at this point, there is little to no space between the two moving averages. But you could have something like that. Now, there is space between the 20 and 200, whereas at here, there's little to no space. So on the left there's little to no space. On the right-hand side here, there is space. Now, that's the space concept using the 20 and the 200. But there's also a third item that can create space, which is the price. And if the price can also, boom, look at that, separate itself from one of the other two items, you have a third item that comes into existence that creates another degree of space. And that is where the price separates from the 20. Okay? So notice here in my diagram that the price and the 20 are relatively close. You see? But it is here that price starts accelerating away from the 20. And it is here that we have a second zone of space. So zone 1 is the space between the 20 and the 200. Zone 2, if you get it, you don't always get zone 2, or you don't get that dual layer of space all the time, but sometimes your stock or your underlying item can accelerate faster than the moving average can keep up, creating a second zone or second layer of space. Okay? So diagrammed another way, look, it can look like this. I sometimes refer to this as the three-finger spread. 200, 20, and price, creating neither of the single individual items are close to each other. Here, all three of them are close. That is what we call a narrow state. Here, none of them are close. This is what we call a wide state with two zones of space. We call this dual space. Remember that term, dual space. It doesn't matter where you put the 1 or 2, just so that you understand that there's two layers of space here. Your greatest opportunity, this is where this becomes very valuable, guys. Your accuracy, your very consistency, your very ability to act when the odds are the greatest in your favor, when the winds are blowing behind your sail so powerfully that all you got to do is throw your mask up, throw your win item up, and boom, you're moving in the desired direction. Your greatest ability to be able to do that, your consistency in your trading is predicated on this. Your accuracy is predicated on this. Your ability to choose wisely is predicated on this. Which direction to choose, which direction wisely is predicated on this. And whether or not you play mostly when the odds are in your favor versus when the odds are against your favor is predicated on this. Most novices are acting when the odds are not in their favor. And on top of that, they have no idea how to determine if the odds are in my favor or against me, not in my favor. This is where it all starts, guys. All of that is predicated on this. Let's get back, okay? So, check this out. If we even take the if we take this 15-minute chart of, we never trade BTC, so please don't get this twisted. I'm just using the chart as an example. I'm only going to tell you to accumulate BTC, to never trade it. We trade other things for BTC, okay? But I still can use it as a way of demonstrating the concept to you. On the left-hand side of the chart, and I'll bring it down a little bit so that it's not interfering. On the left-hand side of the chart, you see all three items. Remember the three items: price, 20, and 200. Right? They're all clustered together. See, all clustered together, all three of them. That is the narrow state. What you see is the 20-period moving average begins to leave the 200s, leave the narrow state, and starts to separate itself from the 200 above it. You see? So we have that first layer of space. Remember the three-finger spread? Oh, I did that terribly. The three-finger spread, right? So you got the 200. The first layer is when the 20 separates from the 200. So we got the first layer here. We'll do a 0. First layer. But you get moments of layer 3. So moments where your price gets separated from the 20 and the 20 gets separated from the 200. So not so wide, but still wide. Here, price, here's a three-finger spread. Price, 20, 200. See? And here you have $200, 20 price. All right. And connect these. And so forth and so on. You see the three-finger spread. Now, sometimes zone 1 is thicker than zone 2, and so forth and so on. Here, I want you to just find all of your three-finger spreads on the chart. You have 1 here, 2 here, where you got price, 20, and 200. Price, 20, and 200. Then we get a really wide one here. Price, 20, 200. You see them? You see all of them? I'm hoping you're following me here. You're catching all of them, right? Because I'm going to show you something after I know that you can catch them. Price, 20, 200. Now, you got this so far, right? I want you to look at all of these. I'm going to draw a line in a different color through all of these, through all of your different threes. Okay? Tell me, I'm going to number them. 1, 2, 3, 4, 5. Out of all 5 three-finger spread scenarios, which number is the widest? Which one has the widest zone 1 and 2? Remember, zone 1 and 2, right? Top layer of space, bottom layer of space. Which one of the numbers has both 1 and 2, or top layer and bottom layer, the widest of all of the three finger spreads? I'm going to go to you right now, and I'm going to look at your comments, and I just want to see if you get this. Which number? I'm going to have to erase the chart to see you, for me to see you. Number 4, you guy got it. Yes, number 4, number 4, number 4. Correct. Correct. I am proud of you. Listen to me. Listen to me. It's not 5, Ari. I don't know where you get 5 from, but it's 4. 4 is the widest. Now, just your ability to do that, just to get that right, you have tremendous odds. You have odds greater than almost anybody else of becoming good at this, of becoming good at trading, and becoming a master. Just your ability to do that. You think it's simple because I've made it simple, but it is. Don't confuse the simplicity for lack of power. Let's go back. Let me show you this. Check this out. Smoke on this. So, the widest one is when you are getting close to at least a temporary bottom. You are either at the bottom or you're close to it. Now look, now let's take this bottom part and let's draw a line across it. Isn't that the bottom so far? You see what I'm saying? So you've got the widest zone, found the bottom so far. Now, could it break? Yes. But the fact is that it found the temporary bottom. Nothing else was able to break it thus far. This is crazy, guys. Do you understand how many hedge funds would pay you millions of dollars if you had the ability to, with a high degree of accuracy, tell them when something is close to stopping its momentum to the downside or upside for that matter? Like, that skill is worth millions of dollars, tens of millions of dollars. Okay, so the widest three finger spread will 8 to 9 times out of every 10 times find you the bottom, and the top. It works the other way as well. Okay? Now, if the space you found the widest, listen to me carefully, if now from the widest the space goes to narrow, do you understand? Without breaking, your next direction is up. Do you see? So let me try to draw this. Let me try to draw this above. You've gone from wide, you've gone from the widest, like that. Now you're no longer making lows. But without making a new low, everything goes narrow again. You see? Everything goes narrow again. To all three items coming close together. Your price, your 20, just like over here. See? If that forms again over here, your next direction is up. You see? You've completed the cycle. You've gone from narrow to narrow. We started from narrow. You understand? And if we go back, so we started from narrow. If we go back to narrow down here, over here somewhere, your next direction is up. Does this, do you understand what I'm saying? Do you understand what I'm saying so far? Does this make sense? Narrow to narrow without breaking the low of the three finger spread, you're near your reversal. Guys, do you again, guys, look, do you understand how valuable that shit is? Do you understand how valuable that is? The ability to be able to say, okay, the next direction's up, and to be right 8, 9 times out of every 10? Dude, to be right 8, 9 times out of every 10, to know the next direction 8 times out of every 10 is a freaking lottery ticket that wins 8 to 9 times you play it. It's huge. You can turn that one thing into millions upon millions of dollars if you have the capital. It's crazy. Now, understand you can't predict with 100% accuracy anything. So you got to prepare for that 1 to 2 times out of every 10 you're wrong with this. But just knowing the concept, guys, this concept, I don't know how many people are watching this now. It looks like there's 422 people here right now on the English. There might be some more in Spanish and Portuguese, but right now, you are elite with just this concept. Like most people hanging out in chat rooms on Facebook and chatting with their friends. Oh, I'm taking this trade. I'm going in here because there's earnings. You blow them away with this. You are head and shoulders right now, with just that knowledge. You're head and shoulders above all of them. All of those bozos. I'm telling you. The same thing works in reverse. Okay? So why don't we take a look at something reverse? Okay? Let's look at how some of my traders today, even Ari's here today. Let me show you what Ari did. He's one of my traders. All right? I want to show you what Ari did. What was the play you did this on, Ari? You shorted, was it Google? I can't remember. What was the play? He'll tell us right now in just a second here. But I want to show you what Ari, and not just Ari, a bunch of my traders did this. He shorted based on the three finger spread. Okay? And I know we're operating on a delay. It was Nvidia. See, he just mentioned it. Okay, so we're going to go to Nvidia. We're going to go to Nvidia. Now, several of my traders did this, not just Ari, but I just saw his name there, so. Now, remember, we trade mostly on the 2-minute chart, so we're going to go to 2 minutes, and we're going to change the symbol to Nvidia. And I want to show you this play by Ari today, all right? So, guys, I want you to look at. So, some of my traders took the long in Nvidia this morning. And Ari will tell us if he was one of the long traders too. I don't know, but a bunch of traders took the bottoming tail bar play. Notice the space is not that far. Guys, they don't have to be touching. They just have to be relatively close, right? So your three fingers are relatively close. So starting off the day, they take the bottoming tail bar play, they add on the first color change. All of this I've explained in detail to you right here on this YouTube channel. Always adding on the first color change. If you haven't gone through my master classes, then what are you doing? Like I'm offering you literally Bitcoin and gold for free, and you don't want to put the time into the work. You're the one messing up. You're the one holding yourself back. All of these things are explained here. Bottoming tail bar play, a gap out of a narrow state, boom, first buy, boom, first color change, second buy. All right, profit take, right? Now, notice that you go to three finger spread. You see? Three finger spread. Okay? Now, in addition to three finger spread scenario, there is a reversal time here. Now, this is not the time for me to go into a deep dive regarding reversal times. My traders know that there are certain times that are more prone to produce a sharp turn in the market. This is one of your first reversal time frames in the market. There are 7 reversal time frames. Okay, this is one of the 7. So we've got this three finger spread at the first reversal time frame. And I want you to take a look at when does the biggest red bar of the day occur. Look at when the biggest red bar of the day occurs, right from your three finger spread. This red bar is bigger than this one, bigger than this one, bigger than all of them. It's the biggest red bar of all. So what does Ari do? He jumps in, and several other traders as well. They jump inside of this bar before it finishes trading, stop above the high. All right, I think Ari did three lots. Okay. Ari takes some gains off the table here, if I'm not mistaken. So he takes 2 off here, and he takes the other one off, one following a bar by bar trailing stop. Boom, out, right there. Now, you couldn't have played this move to the downside better. He grabbed almost every single drop that it had to offer. He even knew when to get out, which is based on our 50% profit taking rule. So this is the top 50% of the move. This is the bottom 50%. When you're shorting near the top, you go for the 50% mark, the 50% mark. You don't get freaking greedy like a little tiny piggy, oink, 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 and go for this. That's what novices do. The pros are satisfied with the halfway mark most of the time. Now, the only thing I will say about Ari's play here, boom, 3 lots, 3 finger spread play, right? Stop. Profit take is okay. He didn't add on this color change. So he missed that opportunity, unless I'm mistaken. I don't think he added here. He should have added there. But maybe he did. Maybe he can tell you he did or not. I can't remember. One of my traders didn't add, and I made a note with them. I made them aware of the fact that they should have added there. All right? But these exits are perfect. Incrementally exiting like I teach you. Low risk. So look at the risk going into the bar, stop, so above the bar. So here's your risk, and here's the reward. Now, how many of those risk units, that's your risk unit, fit inside of your reward unit? A lot of them. That's how you stay in business in this game, people. Do you understand? That's how you win, making your risk unit small in comparison to your average profit unit. And so a lot of these risk units fit inside of this profit unit. And if you can keep the majority of your trades like that, where you're risking a fraction of the profit that you gain, you're in this game forever. And so, guys, I had some traders that whacked this both ways. Long, stop, add, profit take, incrementally profit taking, like I teach you. And then enter again, short, profit take, should have add, first color change, profit take. Isn't it the same thing just in reverse? The long one is longer. That makes sense because we're above the moving averages. The short trade is shorter, but still it's the same thing. So if you were to put these pictures together, it would look like this. Enter, add, profit take, and profit take. You want to incrementally come out of the trade. And then if you did it the reverse, it would look like this. Enter. Well, this one he did. Profit take, add, profit take. Boom, boom, boom. Boom, boom, boom. It's always the same, guys. We're playing boom, boom, boom. Boom, boom, boom. That's every trade. Boom, boom, boom. Even downward. Boom, boom, boom. Look at it. Boom, boom, boom. The downward one. Boom, boom, boom. All right, now it's your turn. You say it. All right? I just want to see somebody say it. Boom, boom, boom. Right now, I'm not even going to go on until you say it. Type it for me. Boom, boom, boom. Yeah. Do it. Boom, boom, boom. 4K Drive Tour says, I can't believe I finally caught you live. Good. Welcome. Glad you're here. Boom, boom, boom. You got to do your head like that. Boom, boom, boom. All right. Sit. There you go. I love it. So, guys, you can literally, you can freaking take this and we can just go through some markets and just practice identifying three finger spreads and seeing how they turn. That's crazy, right? To be able to practice it like that. All right. So let's just do this. Okay. Find the widest three finger spread on this chart. Find the widest one. I'm sure that's pretty easy for you to do. I'll give you a moment here. Find the widest one. Remember, price 20 and 200. Give you a few seconds here. You got it? Got the widest one, right? It's right there in the middle of the image, right? Price 20. See? Price. All right, so there's your widest one right there. That's the widest three finger spread. You see the turn? You see the turn? All right. And that's all I want you to really be able to look at. Notice how your big moves happen when you go back to narrow. So you see how you go back to narrow here? Look at the moving average, get close to the other moving average again. You see? And it is at the narrow state that you explode out again. You see? So this is why once you go back to narrow, the market resets itself. Now it could go this way or this way from the narrow state. You don't really have to know in advance. You just have to see when the biggest bar emerges, right? There's the biggest bar. So you know that from the narrow state, now the move is down. And how do you play this? Boom. You see that green right there? Let me open it up for you. I'll open it up for you so you can see it. I don't want any of you blind mofos to miss this. All right. All right, so here we go. Narrow state. Look how close the moving averages got to each other. Now, out of this narrow state, what bar emerges as the most powerful? Right here. Boom. Boom. What's my first color change? Right here. Boom. 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 All right. You get the three finger spread here, very wide apart. Three finger spread very wide apart. And you know reversal is more likely now, right? So I've shown you one to the upside and one to the downside. It's very powerful, guys, very powerful. It's a simple concept that a 12-year-old can deploy, but don't confuse simplicity for lack of power. That is what I don't want you to do. All right? I want you to do that. Okay? You'll always be able to now. I just want you pulling things up and grabbing the three finger and watching to see if you stall from the three finger. Now, there's one little nuance I will tell you about this. You see how this is almost like railroad tracks with the 20? That's not a spread. Your spread is not a railroad track. So if your stock is doing this and your moving average is almost parallel with the stock, that's not a spread. Your stock has to accelerate away from that moving average to be a spread. Okay? So your spread is here, not here. Your spread is here. So this is, I know we stalled up here, but it's not really the spread I'm talking about. You've got the one layer spread, but you don't have the two layer spread here. Here you have the two layer spread. See how we accelerate away from the 20. So now you have the three layer, the three finger spread. And you can literally, guys, you can literally do this all day long, just picking different things. Boom. 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 And really, not a significant new high after that first one. And here we go again. Biggest red bar. Boom. 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 I like that. It's really, look at the drop from the three finger spread. Look at it. Let me pull it over to you. Let me pull it over to you. Let me do the sound. I got to do that sound for you. I got to do it. You know me. I got to do it. Blow it up real nice. So you got the three finger spread way up here, right? Boom. Really wide there. And then biggest red bar. Boom. All right. So now what do you get? Let's do it. Let's do it in a different color. Boom. No, that's too light. Let's do it a darker color. Well, let's do it black, I guess. Boom. 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 It's always the same, guys. It's always the same. You see the drop? I can open the bars up a little bit and you'll see the drop. That's all we're after. Boom. Then the bounce. Boom. Boom. That's all we want. It's not a lot to ask for. Is it a lot to ask for or what? No. Everything is really like that. You know? Boom, 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 boom. I love it. Space, guys. Space. Space. Space concept will take your profits to outer space. So, this is what I want you to do. I want you to go out into the markets, any time frame, options, bonds, stocks, futures, cryptos, I don't care, whatever it is. Any time frame, pick a time frame. 2 minute, 1 minute, 5 minute, hourly, daily, weekly, yearly, decade-long chart, I don't care. Practice finding 3-finger spread scenarios. Now, specifically, 3-finger spreads that reverse with a power bar. Those are the creme de la creme. Do you understand? 3-finger spread and reverse with a power bar. And watch your acumen, your sophistication go to an incredibly high level, higher than it is now. Just practicing that. 3-finger spread, power bar, 3-finger spread, power bar, 3-finger spread, power bar, 3-finger spread, power bar. All right, powerful. Now, guys, look. If you are not one of mine yet, all right, meaning you're not in one of my programs, but you want to be, but you can't. It's just the cost is just, because there's a cost. The cost is just, you're just not ready for that cost yet. The next best thing for you is this, guys. Let me show you. All right? It's this. Check this out. It's my VIP trading club. Guys, it's a fraction of the cost. And we get together every week for as long as you want. Every week we get together. We do a deep dive on every concept that I rely on, every technique, tactic. So every week we cover one of the things that I rely on, one of the things that I make money from, a tactic, a technique, a strategy, a concept. We do a deep dive on it. Then you get an assignment to go out and do that thing for a week. We come back and we repeat. The next week you get another item. We do a deep dive on it so you really understand how to go out into the real world, deal with it, play with it. We trade live once a month together. Do you understand? So in this program, you're with me every week. You get an assignment every week. You get to trade with me live. We trade together every month. All right? So we do 4 sessions a month together. One of those sessions is a live trading session. All right? And the cost is small, guys, $27 a month. That's the sale price for you. $27 a month. The yearly subscription is usually $600. We're dropping it right now to $297. Guys, for a year with me? A year? Are you kidding me? Come on. And then if you want the ultimate VIP elite, is $897. All right, this comes with chock full of other things. Listen, I don't want to turn this into a sales thing, but what I'm saying, all I'm saying, guys, is that you can find that at VIPtradingclubs.com, VIP Trading Clubs with an S. All right. All I'm saying is that some of you might be, this might resonate with you so much, guys, that you feel like, all right, I'm ready for the next step. You can't really truly learn how to trade from a YouTube video. I'm sorry, you can't. You can't learn how to trade from a book or even a seminar. You really need some live trading under guidance. You need that constant, you can't just read a book and the book is finished. You need constant weekly contact. You need to be refreshed. You need to be put back on course every week, because if too many weeks go by, you can get off course and lose yourself again. And it's impossible to do that with this, because we're meeting every single week, going over things every single week. You're going higher every single week of your life. If you give me 6 months of this, you don't have to do it forever. You give me 6 months of being with you every week and us getting together and putting it all together in a live trading session once every month, dude, you're not even going to be able to recognize yourself 6 months from now. So this is kind of for those people that are in between being a full-fledged program member and being just a YouTube video watcher. Now, that doesn't mean that my content doesn't have value and that you can't increase your level of sophistication. Yes, but this is just the next level. This is turbocharging that. All right, if you're ready, that's all. But listen, I told you that I had something to share with you today that I thought was, we touched on this before, but I thought was worth us going over today, largely because this was one of the main tactics or that a lot of my traders use to put in some, to put up on the board some really powerful numbers today using this concept. So I said, that's what I'm going to cover on the Technical Analysis Thursday today. So I decided to do it because of that. But again, don't confuse its simplicity for its lack of power. It is truly, truly powerful. Now go make it count for you. Go to work, practice identifying it, practice implementing it. 3-finger spread, power bar. 3-finger spread, power bar, lose only 1 bar. And you're golden. All right, guys? All right, I'll see some of you in the VIP Trading Club session. We have a study session actually tomorrow, VIP Trading Club members. The rest of you, be safe out there and stay close. Next Monday coming up, live Q&A. Ciao for now. Boom. Boom.